What's going on, guys? Welcome back to another video. In this video, I've got another really important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a brief analysis of the Ortex short interest and utilization data, like we always do, to get a better understanding of where we are at in terms of the short squeeze side of this investment. But quick disclaimer, when we are looking at that Ortex data, we do have to take it with a grain of salt because, for one, they're only getting about 85% of the total market data, and two, we know by now that there are many different ways for these institutions to hide their short interest, and it's not going to account for any of the naked or synthetic short positions that are out in the market at the current time. Now, in addition to this, we're going to take a brief look at the option chain for AMC to really get a better understanding of what happened this week and honestly, how we have really won. We've seen the stock really trade around this max pain number over the last couple of weeks, and the way we are trading right now, it does not look like we are going to be heading down to that max pain number, but again, that could always change by market close. Now, again, we have seen two really bullish days for AMC this towards the end of this week, and I don't think that is going to be over anytime soon. We have a very strong catalyst coming up that I do believe is going to provide a lot of bullish sentiment and heighten everybody's expectations for how AMC is doing as a business and really provide for the opportunity for us to increase the value that we are currently trading at, which I think is going to be absolutely awesome. So we're going to take a look at that as well. But what we really need to take a look at, the most important thing that we are going to cover in this video, is this situation surrounding those trading suspension. There has been this new rule from the New York Stock Exchange that has been proposed that I think is scaring a lot of people, and I really want to cover that in this video to make sure that everybody fully understands exactly what this rule is and how it is really going to affect everything or not affect anything at all. And in addition to this, we have the SEC really coming out with something very strong, which we're going to quickly touch upon in the end, but don't want to waste any more of your guys' time. Let's get right into the video. If you guys enjoy the information and analysis that I provide for you in this update, make sure you go down and hit that like button. It costs you nothing to do it. And if you guys want to see more videos like this, make sure you hit that subscribe button. So where we're currently trading right now, $41.02. Honestly, awesome day so far, everybody. You guys should feel very, very happy with where we are trading towards the end of this week. We've seen a lot of significant red days. We've seen a lot of volatility, so it does feel very good to see us going back up to the upside. Now, when we come over to this Ortex data right here, utilization did step up a little bit. Let me just refresh this page to make sure we have a good update. 87.61% on the utilization. Short interest fell slightly today, and now we are at around 17.49%. Now, again, that short interest is still very, very high, and it's not accounting for all of the short interest out there. I remember Wes Christian saying one time, I know he's a controversial figure in this community now, but he is a very successful naked short selling litigator. He did say that when you are looking at the exchange reported short interest data, most likely the actual short interest number could be 100 to 150% higher. And when we are looking at these potential MOAS type situations, it is probably most higher than that. Now, when we come over and take a look at the option chain, let's give a quick refresh here as well. We have 88,000 contracts expiring in the money this week. Now, again, it's not enough to cause any giant gamma squeeze, but the fact that we have seen the price increase to the upside towards the end of this week, meaning that the market makers have had less time to hedge, sets up really solid for us. Now, we could see some more of this hedging happen in the beginning of next week as well, which sets us up even better for some more price movements to the upside. So then we have to talk about this max pain situation. So we've seen the price kind of hover around this $36 to $39 trading range over the last couple of weeks, and the max pain for this week has switched up from $38 to $39 a share. Now, I think everybody has a good idea of what max pain is at the current time, but for those of you guys who don't know, max pain is the share price in which the most amount of options contracts expire worthless, which hurts options buyers and benefits the institutions or even individuals who are selling those options. They essentially try to pin the price at these levels so they are not on the hook and have less of an obligation to go out in the open market and facilitate a lot of these transactions. Now, we are seeing some bullishness on AMC, but we do have this date coming up, earnings. So we've gone over this briefly in the past, and this is not the actual set in stone date yet for AMC's earnings, November 1st. So we're going to see the actual earnings date get announced probably over the next couple of weeks. But we typically see when there is high expectations for a company going into their earnings date, we do see a decent price increase because of the fact that a lot of people are speculating that they are going to beat these earnings estimates that these other institutions put out for them. Now, there are definitely going to be other factors at play here. We do have to take a look at what the overall market is doing. And over the past couple of weeks, we have seen a lot of market volatility. There have been some things that have been really pushed by the mainstream media outlets, such as the Evergrande situation, the debt ceiling situation, the government shutdown situation, and more recently, we have seen talks of inflation. So we're going to have to really wait and see what starts to unfold over the next couple of weeks. But I do think that if we do see some short-term bullishness in the overall markets, that AMC really could have a significant earnings run-up. Now, let's get into this situation surrounding this new trading suspension rule. So this is the filing right here, SRNYSE 2021-60, and the proposed add to this rule is going to be 7.13. This section right here is what a lot of people are kind of worried about. The exchange proposes to amend its rules to add new rule 7.13 trading suspensions. Proposed rule 7.13 would permit the chair of the board of the exchange or the CEO or the officer designee of the chair or the CEO, that's a mouthful right there, to suspend trading in any and all securities trading on the exchange whenever, in his or her opinion, such suspension would be in the public interest. Now, that's kind of the line that people get freaked out about, that it's really up to these individuals and they would have to make their own opinion on whether they're going to halt trading in any given security. No such suspension would come longer than a period of 2 days or as soon thereafter, as a quorum of directors can be assembled unless the board approves the continuation of such suspension. So here's what I would like to say about this right now. Right, according to that little section, it doesn't really sound all that great that they can just halt the trading of a stock for basically 2 days, or unless they decide to halt it for longer. But again, if there is a trading halt and it is going to be market-wide, it basically just puts a pause on the whole situation. Now, if that were to happen, let's just think about the sequence of events. The ape community is so large at the current time. If for any reason over the next couple of months, they decided to halt the trading in AMC, and we're going to go over a couple of reasons as to why they might do this in a little bit. Do you know how much noise that we would make and how many more people would start looking at this situation and figuring out, they halted this stock, what is going on right there? There would be an absolute whirlwind of people going crazy on social media, telling everybody what is going on. And I don't think that would be necessarily bad for the overall movement. But here's what we really need to take a look at. Proposed Rule 7.13 is identical to the rule text governing trading suspensions currently in place on the exchange's affiliate exchanges, all of these listed right here, and the exchange is proposing to add Rule 7.13 to the exchange in order to harmonize the exchange rules with those of its affiliate exchanges and to provide for consistent authority to suspend trading across the exchange and its affiliate exchanges. So what we're seeing here is that this rule or this type of wording in how the stock exchange is going to be basically thinking about trading suspensions, it's already in place. Now, if everybody was worried about them trying to delay the squeeze, well, we saw the run up in January, and again, we did see those position close only orders come in, but remember what happened in June. We saw very significant price movements to the upside, and nothing really happened. So that is really my opinion on this right now. It's been in place. We haven't really seen anything happen with it, so I don't think it is anything to really freak out about. Now, when we come over here, this is going to be essentially the SEC's FAQ section on trading suspension. So why would the SEC, so this is going to be different than the New York Stock Exchange, suspend trading in a stock? A lack of current, accurate, or adequate information about the company. For example, when a company is not current on its filings of periodic reports, questions about the accuracy of publicly available information, including in company press releases and reports about the company's current operational status, financial condition, or business transactions, or questions about trading in the stock, including trading by insiders, potential market manipulation, and the ability to clear and settle transactions in the stock. So really what we're looking at here is if the company itself would be defrauding investors, which we see right here. For instance, the SEC may continue to investigate a company to determine whether it has defrauded investors. Now, I'm not really aware of a time in the past where the SEC has suspended trading in a stock due to market manipulation. And these trading suspensions are 10 days long. That is what they are looking at here. So for us, we really don't have anything to worry about with these types of trading suspensions because AMC, the company, is not the one that is really manipulating the stock price. It is those over-leveraged institutions on these short positions. So again, I don't think all of this is anything to really freak out about at the current time. This is kind of just the new thing that has been circulated and that people want to get to the bottom of. Now, the last thing that we need to cover is this new development with the SEC and how they are going to be issuing these fines. Wall Street companies may have to give up more to settle with the SEC. This new policy would break from no admit, no deny pattern of settlement. So in the past, and we have seen this many times, when these different institutions have been accused of wrongdoing by the SEC will say, hey, you need to pay us this amount of money in order to essentially get off and keep doing what you're doing. It's basically the cost of doing business at this point. But those institutions would basically not admit or deny the allegations that the SEC would be bringing against them. Now, this is going to be very different. When it comes to accountability, a few things rival the magnitude of wrongdoers admitting that they broke the law, Mr. Gruel said at an annual SEC conference sponsored by the Practicing Law Institute. Admissions, given their attention-getting nature, also serve as a clarion call to other market participants to stamp out and self-report the misconduct to the extent that it's occurring in their firm. Now, this could be a really solid step in the right direction that the SEC is saying, hey, we are kind of handcuffed in some of the things that we are doing, but we're going to make you admit your guilt. And that is really going to bring a lot of attention to what you are doing. And that could hurt you more in the long term than by just paying the fine and getting on with your day. So we're going to have to see what happens with this going forward. If we see these fines get issued and these institutions actually admitting that they have done something wrong, that I believe is actually going to be a solid step in the right direction for the overall health and safety of our markets going forward. So that is going to wrap up this update on AMC. And as you guys can see right here, we are seeing a little bit of a sell-off. It is very possible that they are trying to move the share price down below 40 towards the end of the day. Now, why might they be doing this? When we come over to the option chain here, there are a solid amount of contracts at this $40 strike, 30,145. The market makers would be decently on the hook to basically buy a bunch of shares in order to make sure that they are fully hedged for a lot of these contracts. So let's see what happens by the end of today. I hope you guys are having an awesome day, and I'll see you guys in the next video.